We are now joined by Bloomberg Best forecaster and money manager Hugh Johnson from Albany, New York. Case-Shiller home price number, it is out. Just a reminder that, yes, housing still at recession levels. I mean, Hugh, these numbers worse than expected, down 0.8% year over year, 0.2% decline was expected. It is a reminder that housing's still in a tough way.
Yeah, very tough way, Carol. We've had 4 successive months now when we've seen the price index decline. It shows that there's still downward pressure on prices. And, of course, the reason there's downward pressure on prices is pretty simple, and that is because the inventory overhang, or the month's supply of unsold homes, remains a very, very high level. So it's very hard for me to make the case that we're going to have any sort of a springback or recovery in both existing sales, new home sales, and housing starts anytime soon when you've got that level of an inventory overhang.
You know, it's the $1,000,000,000 question, Hugh, but when does it end? I mean, I know people say years, but in your view, when does the carnage in the housing market, prices stop going down, things start to get normal? When does that start to happen?
Well, you know, there are going to be some features that are going to be improving. Obviously, not obviously, but I'm hopeful that employment conditions will start to improve. Incomes will start to improve. Mortgage rates might go up some, but hopefully not a lot. And with prices staying the same, houses are going to become a little more affordable. So, you know, with employment conditions improving, you should see stability in housing 2011 and 2012. I would say the best and the most optimistic I can get, Carol, is second half of 2012. Then we'll start to see some of the elimination of that inventory overhang, and we'll see prices start to edge up. But believe me, Carol, as you know, it's anybody's guess.
I mean, we need to be patient here, Hugh. I mean, it's kind of crazy how high the market went up, how much building went on. I mean, it's going to take time to just work it all off. I mean, there is just so much inventory out there.
This is what we call the revulsion stage of the housing crisis. It's the final stage. If you look at history, economic and financial market history, unfortunately, it doesn't tell you how long that stage is going to be when you're working off all of the excess that was built up in 2004, 2005. It could take a very, very long time. And as such, it serves as a real drag on the economy, a real drag on the recovery in the economy in 2004, in 2010, 2011, 2012. If you ask yourself the question, why is it the case that this recovery is so anemic? Why is it the case that employment conditions are so anemic compared to the post-war period? It's because we're going through the revulsion stage of the housing crisis.
You talk about the impact on the economy. You know, Hugh, earlier we talked about the retail sector and how great all of a sudden consumers are back shopping. It was a great holiday shopping season, at least so far in terms of the data points we're seeing. And that's going to help out GDP growth. But housing is going to pull it back. How much of a drag is housing on GDP growth in your view?
You know, in some ways, Carol, the good news is that housing's only now about 2.3% of the total economy measured by gross domestic product. But that doesn't really tell the story, because housing is 24% of the asset side, a big percentage of the asset side of the balance sheet of U.S. households. So as such, if prices remain stable or start going down, that's very bad for confidence of U.S. households and very bad for the spending side of the equation. So it's a drag on spending, or it's a drag on confidence and therefore spending. This economy will grow in 2011. It's probably going to be 2.6, 2.8%.
Right. Not
a very strong number, but it's going to be a low number largely because of the drag on confidence of housing.
All right, so drag on confidence of housing. What about drag on consumers, and maybe they're thinking about getting back into the equity markets? We know investors have kept back, you know, but are they going to be confident enough to get back in, and should they at this point? You've been looking at the market on a historical basis.
Yeah, I worry about it. You know, consumers will probably come back into the market. You know, they have a historical record of coming back at the wrong time. I worry a little bit about there being too much individual optimism among individual investors. We're not overvalued in the market. In fact, if there's anything that's good news, it's we're undervalued. So I think we're okay, and they will come back in. But boy, it sure is a reason to be a little bit worried about next year.
We're going to leave it there. Hugh, you take care. Have a good new year.
Yeah, thanks, Carol.